and the best small business loan for bad credit in 2023 and beyond with a 450 and above FICO credit score approval or a 500 and above with same day funding incredibly fast plus 0% interest for 6 to 18 months and up to 150,000 in business credit cards are. Hi, this is Michael with Viral Funding Solutions. I'm a business loan broker expert who's been able to help a lot of businesses and business owners get the right type of financing under the right strategic partnership and roadmap, not only for short term, but for longer term success. So you don't have to further feel overwhelmed, tired, flustered, frustrated, and just pressured by these other people who are possibly egomaniacs or those out there just trying to shove a loan product down your throat. They don't give you all the full details. They overpromise and underdeliver. It's just bad overall. You go to the wrong person. They mishandle your information, or on purpose, they just took this and just spread it out across everywhere, whether you knew it or not. Soft pulls rack up, still not good. Even if a hard pull comes in, that makes it even harder for you, and so much more. So I'm going to be getting into another tab here in a second, and you will want to stick with me until the very end because this is unlike anything you are going to see on the YouTube channel anywhere or on a blog post or what anybody else is really sharing with you. So I'm going to get down to the truths, and you can see here on screen what we have. And this is open and it's available, but it's just a matter of, do you qualify, and your mindset and your character even before you start an application. So what I want to do now is transfer over to a different tab and speak about how you can get in touch with me first, and then I'll go into a post where I'll navigate you on the best small business loans for bad credit and the expectations. So I have this questionnaire that I will link you to down below in the description. Perhaps looks familiar if you've seen my content in the past, but what I have here, it's a very fast questionnaire. Literally, you can get it done in less than a minute, less than 30 seconds if you have everything there. And what you'll do is submit it. You'll select from one of these two options first. The page could look like this and may change over time. So let's say that I am a non-startup, so I'll click that one. Plus, you'll get a free 6-step pre-approval lending checklist that I created from yours truly. Again, this is coming from an expert. That's who you need to hear it from, not from just calling a customer service rep or just calling a company or just hearing it from somebody who just got started in this field. I mean, they're trying to do their best, but if you want it from somebody who's been in this for some time, as well as knows the psychology of getting funding, because I've been in your position, I know what it's like to take loans out, personal business credit cards, do all of that government funding. I've been in the situation where I've had to turn to a third party or a private lender, tried to go through the banks, did it not work for certain things, and just trying to get my foot on the ground. So I can understand the frustration, or you're just trying to look around and just trying to shop around, and that's not your best goal and your interest. You have to be very careful because of how each lender looks at your file is different, and whatever details you have are different from someone else. So get the funding your business needs fast. Complete the questionnaire form below to get a personalized and customized email response for your best funding option and options from a real business loan broker expert. Please be serious. And I say this like from the bottom of my heart. Please do not be unresponsive, irresponsible, unaccountable. That's what it ends up becoming. And whether you are that way or not, it just makes my part even harder. I do like to take the time to get to know somebody on a personal level, on a human level. And I know that sounds kind of strange because I'm an introvert and you wouldn't think so. And it's hard for me to trust someone else, let alone open up. So I can understand if you are like that or will be like that. And it's okay. If we find some common ground, enough is enough, that's fine. I just want to make sure I'm working with someone who's also serious, because on the personal, who's the human that I'm interacting with, and on their business, I can take it up another level and really help you out and get you the best that's out there. No fluff. And then do not be that person wasting my energy and time. I value it very greatly. I'm a very punctual and disciplined person. I've learned that over many years. And there are people who are just tire kickers, pretenders, and then there are action takers, pretenders who then become action takers. Hey, I'll submit the application, or I'll submit the questionnaire. This isn't an application, by the way. What I do is, as a pre-underwriter, I know what the underwriter likes to see. I know what the lenders like to see. So I can quote unquote pre-underwrite a file through the lens of a business loan broker slash agent, somebody who knows what they want the best. By the way, no fluff again. Plus, get a free 6-step pre-approval lending checklist to get you approved for funding faster without making mistakes. In fact, I'm associated with some exclusive partnerships and lenders out there as well who, and organizations, by the way, who are able to beat offers a lot of the time. And so who I am connected with and what I do to go to work to find the best offer for you, to communicate with those lenders, those underwriters, with myself and my team. And a lot of the times are very competitive and a lot of the times beat other offers if you have something on the table and you want better and you're like, well, I don't know if this is it or not. Is this it? Can I get some guidance? So you'll fill this out and literally it can take you less than a minute. I know it looks a little in depth, but it should be because it should weed out the people who are not serious. And even if you complete this, please show up. So I'll go through what happens after this. So when you'll submit this, and it could look different over time, but about it, so you can learn a little bit more. This may change the look over time, but you could learn a little bit about the process there, how it works. There's a video, and some of the content here may look different if I'm A/B split testing or just changing it. But what happens is you'll submit this questionnaire and then you'll go over to the thank you page. There might be a video. There'll be some words that says, hey, I have received your email and you should be getting an email to your inbox. So please go look for it. But in the meantime, watch the video below. And in that video, if it's there, you'll want to see my process on how I do things. So you'll submit this, I'll evaluate, analyze, and give you a proper response back via email on your best funding option and options, thoroughly broken down. So it's an email response back, and it's going to be a big one, but don't be overwhelmed. I'll guide you through that email, and you'll see, oh, I see why he does this. Because a lot of people who expect a phone call from me immediately, even if it's just an appointment set, it can be very not daunting, but it's like a lot of the times they're just information seeking and without any further progress with myself. And it's not like it always has to be that way. A lot of the people do stick with me like a lot because of what I can do and how I deliver. So it's in your best benefit to get that email, open it up, look through it, and you can get started from that email. I'll break down all the different options, whether you can or can't qualify, a conclusion and a roadmap, pro tips, pro material, and you can get started with an app from that email right then and there. And if you need clarity, by that point, at least you know what's on the table. Maybe it's a quick phone call, less than a minute or two. Maybe you needed to further explain your situation. Not always is it needed. I get people who go through this all the time, 6-figure, 7-figure clients, 5-figure, 4-figure, just getting started in their business, 3 figures, 2 figures, 1 figure, the list goes on, and they can just get started from that email and they can respond back, text message. And I don't heckle people, I don't harass. So let's go away from this now that you know, and it'll be on the thank you page, you'll learn more. And through Viral Funding Solutions, that's where you can learn more as well. But the questionnaire will be down below. Now, let me transition over to this post that I created, and I'll link it to you down below. And I apologize if I did go on a little bit about that questionnaire, but I wanted to give you the significance and the importance. I could have left till later, but thanks for sticking with me. Let's go through this as quick as we can. I won't go through every bit of details in this long post because I'll leave it for you down below. Check it out. And what I say to people is, well, Michael, I don't want to read a post. I don't have time to do that. Can you just send me a link? Okay, so what tells me that you will fully qualify? What tells me that you won't even read a single thing when you're trying to apply? All you're going to do is suck up my energy and time, asking me question after question that you know the answer to. You just want reassurance. That's fine. I get that. But at some point, you have to say to yourself, this is common. I can do this on my own. Fill out the app sequence, submit it this way, and that's how it works. So there's this review I made of a specific lending organization, and there's multiple. So you'll see one name, but there's going to be multiple to discover. So you'll want to read through this. It's something that I've been updating over time. What is this with Biddy Advance is one, but they're not necessarily always going to be where you turn to and where you go into. There might be a higher amount where you do more in revenue. So we have another lender, but you'll want to go through me and look through this post. If not the post, I'll leave more information down below in another way. But there's more flexibility and benefits of going through someone like myself because of my connections personally and in business. I have those with the lenders. So when a lot of people do come to me, excuse me, I let them know a lot of the time beforehand that once everything gets submitted, I go to work myself with my team, and I usually get the best for the client. And a lot of times beat the offers that are out there. So as opposed to where you'd get 100,000 somewhere, we'll probably get you 150, 100, 200,000 or so, if so, and a lot of the times. But this post will be down below. You can read through it. And it says here, if you needed more than 25K or even 35K, you generally want to be doing north of at least 25K per month and or 35K plus per month initially to get between 75 to 200% of your monthly revenue. More ideally, you want to have a basis of at least 15,000 plus per month on your lowest month in the last 3 months to qualify between 75 to 200%, excuse me. And the better your revenue shows, the better you're depositing, you're not negative, or you don't have too many or not sufficient funds, average daily bank balance, monthly balances, and more looks clean. You're depositing more than what you're withdrawing. So we're going to go through it a little bit more. And that's what I can do for you. And I really do go the extra mile for people. And reciprocating that is very important. Make sure you respect that energy and time I bring, as well as on your end. I'm always putting myself in your shoes because I've been there. And if I didn't say this, I run multiple businesses. So that's another difference is I have other businesses like a digital marketing agency, affiliate marketing businesses, a few other ventures that I've gotten funding for, not only this one as an independent business loan broker, but I know the trenches. I know how hard it is. And so I'll go maybe a little bit into that later on. But going inside this lender, and again, I'm not saying they will always be the best, but if it does apply to you and you can't get more funding right now, that's something you have to understand that with someone like them, they would kind of more or less try to do a 450 and above. But in this market, with somebody like that in lower revenue, so if you're doing less than 15,000, but you're doing 5,000 on your lowest month, they would be best for you. If you're doing less than 5,000, let's say you're doing 3,000, I'll have another reveal in this post that you can look at, and I'll leave more information to them down below as well, maybe a separate video or a post you could check out. But this type, 5,000 on your lowest month and above, not more than 15,000 on your lowest month, then you can get in and get approved to up to 75% of it with bad credit. Normally a 550 is better. That's what you want to shoot for. I have seen it gone through with less, but you have to have better details, balances, the negatives, even the credit check at some point. Although this is based more off of revenue, not on credit, we still want to make sure, we still want to make sure that, with debt to income and what other obligations you have, charge-offs or things that you have going on where you are over leveraged that could result in a decline. So just making sure that I would say, meet that at least 550. Yes, it has happened before underneath that, but a lot of the times what we see are people ending up in collections with lower revenue. A lot of people end up just defaulting, or people just, hey, I didn't make a payment, can you help? And if you get it in on time, it may be able to help, but I'll leave more content on that in case, what a merchant cash advance default is or a cash advance default is. But these are quick turnaround funding. There are what's called merchant cash advances, where it's based on your future receivables. So whatever we give you, you're paying back a portion of it with your sales that you generate. So in a traditional merchant cash advance setting, what happens is it's not called a loan technically, and they're not based on actual APR interest rates, more on factor rates, and also called the total payback. And so what happens is you're given a lump sum, usually not a line of credit with this. I'll go into that in a moment, by the way, stick with me. You're given a lump sum and you're giving a factor rate between 1.19 to about 1.69. And this is all explained in the post here, guys. So this is why you want to go through it. And I can't go through every little part of every little service. So make sure you check this post out. And I'll also leave other links to get started with. But with 1.19 to about a 1.69, that's about, people would say, well, that's 1.19, that's 19% interest. 1.29, that's about 29% interest. You can look at it that way, but it really isn't amortized that way into the schedule. So it's like you get 10,000, let's say, to start with. And you have to be understanding that with bad credit, you should have stronger revenue if you want to get closer to your goal. But if you don't get what you want initially, let's say you wanted 15,000, but you only got 7,000. Well, you have to start somewhere and ask yourself, does the benefit exceed the repayment? And you may be getting only, you may be getting between 30 to 60, 30 to 6 months, 30 days to 6 months, I should say, excuse me. So there are early payment discounts. You pay quicker in the first 30 days, 45, 60 days or so. There's some eligibility there. And if you needed the full extent, sometimes up to 4 months or even 6 months, you would just pay more on interest. Just know that a lot of cases. But you have to start somewhere and say, even if I got 4 months with bad credit, because with bad credit, you could be doing 20,000, 35,000, 40,000 above the 15,000 just minimum, but you have a 550, 560 FICO. So in that case, usually you get between 4 to 6 months. And if you're like, well, why am I getting bad credit? Or why am I getting these kind of 4 to 6 months? Because you don't have the credit, Mr. or Mrs. So you have to work on that and get above a 600. In this market, 600 and above with 25,000 minimum, with at least a year's time in business, 6 months, we could see it 6 months and above, then you could likely get between 7 to 11 months. When you want to get into 12 to 24 month time frame, you want to be doing north of like 675 or that, and about 50,000 in monthly revenue, about a year's plus worth time in business, etc. And there's a few of those things that are explained in this. and it's standard, and it's the best of the best of what you're gonna get. And don't be like, what, but I'm gonna go search for, and you're just gonna be doing more harm than any good. I've seen that. And then the qualifications, again, you can go through that. 6+ months, a 550 FICO, but 450 at times, but a 550 is really the sweet spot for that type of service if you're just doing the minimum of 5,000 per month. 6+ months time in business, you need a business checking account. You know, I'm giving you the best lenders. And if you have a personal checking account you use for your underneath your personal name, yeah, there's an alternative, but you're only going to get approved usually between 20 to 25% of your lowest month of the last 90 days usually. But you have to start somewhere and say, hey, well, I needed it, or I'm going to go get a business checking account, start depositing into that business checking account within a month, or actually 2 to 3 months, more of the 3-month time frame. You have enough of deposits. You're not just transferring from personal to a business checking, because that doesn't look good. That doesn't count as true organic revenue. When you're transferring from personal to business, that doesn't count as sales being deposited in that one primary personal or business checking account. And so you have to be very cautious of those things. A business entity, LLC or corporate sole proprietor at the moment, minimal non-sufficient funds, negative days, no more than 5 non-sufficient funds or negative days in any of the last 3 months. And there's more contingency to that. So if you had a few, but your daily bank balance is strong enough, then we can work with it. I've seen it where it's just one non-sufficient fund, but your average daily bank balance, you know, you want to keep it above 1,000. 1,000 and above is the sweet spot. With these lower revenue type of lenders as well, yeah, we can go underneath 1,000 in some cases, so it's fine. It's flexible. We will not know until we go in and we actually look at the file. All industries welcome, with some exceptions out there if it's very high risk. Online banks, that is most acceptable. Square, all else like MoneyLion, Found, and others won't work. In some cases, Square wouldn't work. I could see that happening depending on the account. There are a few other contingencies as well, but I know people will come through and go, well, I wasn't able to link this, and it's linked with the software like Plaid. It's very safe and secure. With a lot of these lower revenue type of lenders, sometimes they do it with these fintech companies is they have you link your banking account, and it's very safe and secure, just so you know. You probably have done this already in the past and you know, or you've tried it and you're like, well, I don't know. It is very safe and secure. We can't manually underwrite every file. Can you imagine every underwriter? The banks are already short staffed. So another thing too, when you're looking at outside of the banks, is they're becoming more short staffed, believe it or not. The underwriters, especially that, they don't even communicate well enough anyways. And so those of you who are looking for like SBA loans or alternatives to that, I'll go into that in a moment, and I'll go into higher revenue funding. So please stick with me. Current loan considerations, we'll want to go through that. I won't go through everything of this. This is more in detail, up to 75%, the term duration, the factor rate duration, the advance application, how to get started. But there's also a hybrid advance, like a merchant cash advance, as I said earlier. There's a hybrid advance company, and those are the ones I like to work with even more. And I have those connections with, and they're generally 50% less expensive. And it's a set amount that you can get, and usually a set ACH withdrawal. And that's what you see: ACH with deposit, ACH withdrawal. There are some other ways, online checking if you're with the right organization and you're in the right tier to get that. That's why I recommend when you go through me, you'll get the best options. Like a hybrid advance with a term loan intermix or somewhat similar non-APR products you see in this market. And you usually see between 4 to 24 months, but if you already have bad credit, it's going to be hard to get you past the 6 months, especially if you have another current loan or another advance, another position, non-banking related, or sometimes bank too. We're going to see it and go, well, you just received one for 6 months, and in about a month or so later, you're like, I needed more money, so I needed a second position. We can't pay the existing balance you have on the first one, especially if 50% and over it hasn't been completely paid, and that's what's remaining. And so we have to be calculated, and I can give you these types of rundowns and understand what position you are, especially debt consolidation, refinancing. I'm doing a lot of that. I've done it myself. I've done it with a lot of people. So on the following page, when you click the button above, you can go to the Business Capital Navigation tab to get started and go through that app sequence. So it may look different, the interface, and in who I'm in partnership, more flexibility, more exclusivity, and it gives you a better in-house look and what I do to go to work for. Like I work with a lot of direct lenders and also indirect who I already have those direct lender partnerships with. It just looks better to do it in an in-house, more kind of a brokerage setting because of the team that I have and what I'm able to do. And it gives you better approval odds, better terms and rates, maximum approvals, more flexibility, early payment discounts, beating offers. It's better for you to do it that way. You don't always want to go apply directly in that sense, because they a lot of the times can decline. They won't give you the best. It doesn't work in your best interest. I've been there in this market. You don't want to be doing that and beyond. So please submit the application only if you are serious, and we'll show up when I'm there to help and reach out along the way to follow up with you. And if I need feedback, I will guide you, and let's make this as frictionless, as smooth as possible. Please, let's not cause resistance. And there's at a point where there's friction. I get it. In certain cases, it's not like it won't always exist, but let's eliminate that. And one thing I want to go into, and I'll go into if you're doing less than 5,000 a month with bad credit. If you don't know this, I have a TikTok channel. This is just so you know and have reassurance that there is a real person on this end who does create a lot of value for people. And the difference between me and someone else is I don't sell you. I communicate to you like I'm a friend or family member, albeit we are not blood related. But I think about it like that. And I wouldn't want to treat somebody in a very bad way. You wouldn't want to be in a position to take that from anybody. And I would consider myself a very nice person. My younger brother, my family, they would say that. And I'm not somebody you take advantage of. I give you guys the benefit of the doubt sometimes, but I'm definitely not somebody like that. Don't mistake my kindness for weakness, I'd say. I'm not an aggressive person. I'm not negative. Usually I'm positive, very much so. My thought process, I've worked on myself. I have these other businesses that I've ran as a business owner slash entrepreneur. So I have the mindset to go the distance and I take action more than I speak. So back to this post, you can see that I've made some recent ones, but some older ones which got a lot more traction. You can see 11.9K there, views. And if we keep scrolling down, there's going to be more like 20,000, 30,000 and more. Some recent ones a little less because of the algorithms and things that change. And then in my Facebook, you can see there, I don't think I can really show you the reels at the moment unless we're on mobile more so. That's why. But here's my profile helping out other companies get funding. You can see that. I may have made reels there, a lot of people commenting. You see, I go down the list, me with longer hair. You can see people posting there. There's this one I think I got about 25,000 plus views. So I appreciate you guys. Thank you for always your support. And if you are new, you will understand and assimilate, even be able to relate in capacity to getting funding and understanding your business better. So you can just see a little bit more helping businesses out and that I can do a lot more than just business loan brokering, but that's my major focus at this time. And so back to this post at hand, there's a questionnaire again, there's the site. So here it is, 1099, self-employed, contractor, gig worker service. So if you're doing less than 5,000, this usually doesn't go with a credit check. There's no credit requirements because it is lower funding as well. And we understand the position you guys are in, Uber drivers, musicians, Lyft, grocery shopping. You can even be in trucking. It can even be just a small business because you don't have a business checking account or you were doing less in revenue than 5,000. Then this is one you can get into. And I just go into a little bit more of the details there. You can learn the reviews. Just be careful. There are people who are just putting shameless reviews and they're just trying to bash down a company. If you see something bad sometimes, especially with them, it's not necessarily the truth. It's just maybe another marketing plot from another company or just somebody didn't understand the credit expectations or because they were just so out there. They never worked on their business and personal credit that they just want to trash a company. Others are more truthful. I've made reviews on this channel about those. Just be careful, but take it with a grain of salt. And you just have to understand that if you're not in a position to have the business credit, this doesn't report to business credit bureaus, just so you know. You don't have to have business credit established. If you do, great. You don't always have to have these report to the credit bureaus. That's not the major premise. With like some lines of credit, some term loan options, maybe SBA or a few other ones, you'd see it being reported, but that's not entirely your goal. You can do that in other ways with vendor credit, installment loans, credit lines, revolving credit lines. And so the major thing to this is you have to understand that there are personal guarantees involved, and that's fine. There's nothing wrong with that. You could be in a pickle where you just, hey, I have a new mortgage, I got a home for a family member, whatever you're doing, you just want to not have that show up right now. But the major thing is you got to take care of your credit. You got to take care of it, period. If you're looking at this from I'm on a bad credit level, I'm in a tight pinch, I'm scrambling for funds, you're going to be very much like just tensed up. I know that feeling. I've been there. And you don't want to just tackle it like that and then just don't know what you're getting yourself into. Just understand the funds you have or what you're using those funds for. Have a projection value. I always tell business owners is come up with a plan. Look at your repeat pattern, especially if you've been in business for some time or you know the market and you go, this is the time where I'm going to need this. If I only take 7,000 and I got to pay back 10,000 or 12,000, whatever that is, I'm going to make 14,000. I'm going to make 21,000. Then the next month after that, and then I'm going to make 25. I might come back to 21, but you know that. And you should be taking this money for growth and expansion, not just survival money. And you're looking to pay off credit cards and you're like, I can't even pay the interest now. I can't even pay the principal. I'm going back on my payments. That's not the way you look at it. You got to work on your personal credit. And I have personal credit resources I'll link you to down below, as well as personal credit repair, one of the pros that I recommend, who have a great personal and business relationship with. And again, you can fill out the questionnaire if you need to right here. It could look different in time. But again, I'll evaluate and analyze and give you a proper response back via email. I just have so many people who want calls with me. It is not always a rewarded thing. You have to understand that a lot of people, whether you will or not waste my time, I can't take that risk. And it has to make sense for me to see something concrete first. And if it makes sense thereafter to do a call, but not always needed, then we can go into that realm. But it's not always needed. Just believe me on this. I'll take care of you. I got you. And then you can get started there, just in case there was an agent ID you needed to input, and my name, there it is. In case a lot of the times you don't have to, who it is, who it's not for. Business owners with at least 6 months in business, you're making 5,000 plus per month in revenue, you have a business checking account, 550 plus FICO, although we said we can go a little bit less, but 550 is what you want to shoot for realistically in this market. All industries welcome, with a few exceptions if it's too high of a risk to take on certain investments. You're taking the money, you're just using it for investment properties, like a real estate investor, just using it for fixing and flipping homes, Airbnbs, etc. Use it for working capital growth, expansion reasons. You can use it for payroll, debt consolidation, or whatever it is you're trying to just COVID relief expenses. But just understand that this money is not supposed to be inexpensive. It's expensive for a reason, because as a business, you should be growing your revenue, your profit margins. And if that has an effect to your cash flow on a positive level, great. And it does it for you on your net profitability, your net operating income, your debt service coverage ratio, great. Not will it happen for everybody. So you just have to be in better position to understand this. And even if it's just a temporary thing, if it's a temporary solution and a plug, well, it's going to grow and it's going to help your business, then you take that chance. Now, if you're like, well, it'll be too expensive, I can't justify it, I don't make enough of the deposits per week, I'm not doing it regularly, then we could possibly look at an alternative on the personal side, but you don't have good credit. And so you got to get to at least a 680, if not a 700. In this market, to thrive, not just survive, you want at least a 650. I'd shoot for a 675 and above, but a 650. I would say usually a 620, 625, but it's 650, if not 675. And if you need that getting worked on, then I can help you with it. And there are alternatives, but with like business credit cards out there, but it's going to be hard to get approved if you don't have an optimized personal and even business credit profile. That's why I always recommend that. Pros and cons, I go into that. Alternatives. So there are some alternatives there on the screen. What you do have to be very aware of is there are those out there that are, direct, indirect. You don't know where you're getting into. You just don't go and apply to a company because you heard it was good on an ad or because they advertised it on TV. A lot of those people don't get approved. And if you get approved, you don't get what's best. You don't get those early payment discounts. You get worse rates and terms. You don't get the partnerships that I have because they know me and how they work with me and my team. And so you are not going in the right direction by doing that. You don't want to do that in this market. And so you probably heard of those other companies out there like On Deck, Alameda, Vox, or there's a lot more, Rapid Advance, etc. And you don't want to necessarily just go and apply to those companies. I work with in partnership, in direct partnership, or also in indirect partnership, but also underneath this house that we can look at better because you get better benefits, better flexibility, the better partnership longer term. So you just do not want to go doing those things. I have people come to me all the time, and I thought that in the beginning that was the best thing to do, and it wasn't. And I said again here, only start it if you're serious. Need more than 25,000. Now we're gonna go ahead and go through this as quick as we can. I know we've gone over time now. That what I wanted to meet was about 20 or so minutes. I think we're there, if not more, already. But if you need more than 25,000 and you have bad credit, we can lend between 75 to 200% of your average monthly revenue. We look at the lowest monthly revenue in the last 3 months. We also look at your current monthly revenue. We look at fluctuations, but the lowest monthly revenue is the one we like to take in the last 3 months because that gives us more cushion. And we look at the average, the lowest and the average. Are they close enough? Are they not? So if you're saying you're doing 25,000 on your lowest, you have 30,000 on average. Well, 25%, 75% of that 25, 75% of that 30K, but usually that 25K. But we look at the current revenue too, and we see if you're projecting it. If that's a projection value too, we might take that number, but usually it's the lowest month. And we just do our own calculations are on our end to give us more of a cushion. But if you're saying you're doing 25, or you're saying you did 60,000 one month, and then you usually do 120,000, maybe you just had a slow month, not recently, or if it is recently, okay. But what if it's the last month in the last 3 months? It's like the oldest one. You're 60,000 there, but then you were 80, and then you were then 100, and then you were 120,000. Well, we might be able to get you then between 60 to 120 or 75% of that 60,000 up to 120,000, but not more in a lot of cases. Because you got to take your foot in the door, put both of them in, and say, even if I just got 100,000, that's all I needed at a minimum. But if I didn't get that and I got 70,000, I have certain projects, I can use that 70,000 for what I need to come back, pay off 50% of the balance. Even in 45 days, we have add-on funds. We can try to add more on if you needed it. And then 50% of the balance then paid off, then you're open for a renewal. At that time, we can even get you double, if not more or less, and then get you better rates and terms and more maximum funding. Like, okay, and you decide to pay it off early. All right, I want to pay off the remaining balance. Great. Now I want to just have a first true position and start this over again instead of a second position or getting you more funds that way. So if you have first positions, we can get you second, third, fourth positions, and depends on the service. So sometimes it's first, second, above, and then up to 25, more than 25,000 in a lot of cases. We can do that, 35K, etc. So qualifications are there: 500 plus FICO for this one, 15,000 plus in monthly sales within each of the last 3 months, 4+ months in business. US and Canada is available. You can find the Canada funding section down below, and we can go through that in a moment. I'll leave a shortcut. I got to hyperlink that, so if you were to click it, it'll go down below. I made some adjustments recently because we've opened up things. You must have an open business checking account. Must be in the name of your business, not a personal account used for business. A lot of these lenders nowadays, they want online business set up. So make sure you have online business. That's how they're able to work with the private investors, private lender route, how they're able to deposit and put the money in your account, ACH transfer, ACH withdrawals. And it's very safe and secure who I work with. You just have to be careful about which ones you look at. And I work with the best, just so you know. And the relationships that I've formed with them over time, it's very good. And so here, you are not transferring funds from multiple banking accounts, as well as not from personal to business checking, as we alluded to earlier. That doesn't count as organic deposits or true deposits. This is not actual revenue. So if you have multiple business checking accounts underneath one banking institution, or it's multiple, we just want to see where you're depositing most frequently. You want to apply with that account where you're directly depositing the money into the most. You could be transferring it from your one major account, and that's the one we want to see. And we want to make sure that that is verifiable to a lender's eyes and my eyes, and to the underwriters. It looks like you are manipulating bank statements, whether you are or not. Because let's say one company who is working with certain vendors and suppliers, the vendor gets paid first, or there's an auction, the vendor gets the money somehow, and then that vendor then puts more money into that account and then transfers it over to you, whether it's from a personal, it's even not even better, business to business, okay, but still that money could be manipulated in many ways. We can't always verify that, and we're not always going to go to the suppliers and look for those accounts. So sometimes we can't accept that, and we won't look through it thoroughly. But if you have different business checking accounts, we have to see how that transferring is going from different multiple business checking accounts and see if the legitimacy is there and making sure everything looks clean. And so we'll ask for more accounts at some point if that's the case. If you're transitioning to another business checking account or another bank, online or offline bank, and it's most recent too, we'll look at the one you were applying with. We'll see the 3 months bank statements under that account. We can pull from the other account as well, even if there's only one statement or if you've already built that. We just have to make sure you're leading in with the one account that's going to help you the most. And if we ask for more, and if it's most recent, then we'll do that. It just depends on each situation. LLC or corp or sole proprietor at the moment, a minimal non-sufficient funds, negative days, no more than 5 non-sufficient funds or negative days, overdrafts, just going into your account, you don't have any more money. A lot of people, they go into chargebacks and things that they just, they're withdrawing money that doesn't even belong there. Negative days in any of the last 3 months. So no more than 5 non-sufficient funds or negative days in any of the last 3 months. So don't have any of that, not even both, etc. And if you have stronger balances and you have a couple of them, then we're willing to work with you and then fulfill on the needs for that funding. So only online bank fundable is Square. All else like Moneyline, Found, and others will not work since they can't process the ACH part and even the decision logic bank verification. So get a traditional bank if need be, or a different institution. And what I mean by decision logic, by the way, if you're getting value from this and you have any questions, I haven't said this, please leave me it down below in the comments. But what you will want to do as well is get started with the questionnaire. You can also view this post, and like I said, you can get started from here. In that questionnaire form that you'll fill out, I may still have it open here. At the end, I'll show you what it kind of looks like. I'll put together for you. But we do a decision lock bank verification at like the final underwriting. This is for the lender to just verify that you are doing the revenue you say you are doing and how you're depositing in that current month. If we see that you've been doing 35, 45,000, but in this month you've only deposited 15,000 and we're halfway there, we're at the end of the month, you went backwards. And we see the red depositing, we see the revenue frequency. We're like, okay, we can't do that. We can't give you the 45,000 based off of you doing 40 or 35,000 before. It's like, well, you're depositing only 15,000. We're at the end of the month. Well, how can we give you more? That doesn't make sense, does it? And so another thing too is when we're asking for multiple, if you have 50-50 partnership, 25 split across the board, we want to make sure you put that owner, if you're a majority owner, 100%, you're just going to be one. But we will pull from the lowest credit score if you have in partnership, like 50-50, 51% and over. A lot of the times we can just probably put one, but you'll want to list that secondary owner and we'll guide you on how that works in the process if anything were to change as well. But we will take that, like you're in partnership, of course. You have an 800 credit, yeah, but over here you have a friend who's in like a 500 credit. So that's the one we're going to look at a lot of the times, and it's just that's the case. Keep track of each other's credit, be on top of it. Current loan consideration. If you have a current capital advance, the amount still owed will be taken into consideration and cause a reduction in your approval amount. One thing I want to pause at. I know we're going into this video on small business loans. Technically loans, this is an advance, like I said, not technically a loan. And that's what you see in this market anyways. Not will they all be APR. There are equipment loans, and those I'll get into in a moment. So please stick with me, and then small business loans through the administration. And so, okay, more funds, second to fourth positions may be available. But what happens is if you still owe on the existing amount, first, second, or whatever position you are in, just know that if you haven't paid over 50% of the balance and you have multiple positions and the total balance isn't where it needs to be, we can't just take one over here and buy out from the other lender and you net the difference. And we see your total remaining balance, we're like, you still have over 80% to pay off, or you have about 10% on two positions, but the lender feels more comfortable paying off one of them. You only have one true position, and then we go, hey, we can get you double. You got 45,000 last time, or you have only 10,000 remaining now. Well, maybe we can get you 90 to 100,000, if not more. So then we can pay that off, and then we net the difference. You say we got you 90,000 minus 10,000, 80,000 is probably what you would remain with. So it just depends on the position. A lot of people, they would say, hey, I'm growing fast. I need money. I need it for renovation costs. They came back to me. They're like, I needed just a minimum of 100,000. Can we do that? We got them probably approved for 200, 250K. How much of the balance is remaining? Then we look at a second position. If they really needed it, then we can do that. I always say start with one position. If you're going to take multiple positions, use it for growth and expansion. If you're growing fast, too fast. You're like, I just need more money. I haven't paid the balance off here to get renewals on this or da, 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 da. So then we can get you more. But with a person who goes, I didn't even know what I was doing. I just needed money. They have multiple positions. They haven't even been able to make the payments. They're drowning in that. Lender can't help them. They didn't come to them before, or even if they did, it's like they can't. They're not going to be as open to do that. You knew what you were doing, or you at least know what you've received. You should know your business, and that's the thing about being accountable and responsible. You know your patterns, know where you want to be with this money when you take it. If you're not positive on cash flow and you're going to go backwards, then if you're already negative on cash flow, that's not what's best. So you are like, well, I have bad credit. Or if you have good credit, you're like, okay, it's fine. I can look at other options. I have a 680. I can qualify for this, but I'd rather take a personal loan or a personal line of credit. I can use this as a down payment for a real estate investment or whatever it is I need. Or I feel like I can qualify for an SBA loan or a different kind of funding, but it's not available. Like a lot of lenders don't want to lend past 2 years right now because the banks are slowing down. Yeah, we can go up to 36 months, but when you look at the term loans options, yeah, you can see 1 to 5 years, but it's hard to get past 2 years, 3 years, especially if it's your first time around. You have to be able to work and build your relationship with the lender, with myself, with the organization. That's how you work at it. And so if it's idle, it usually doesn't cause a reduction. So you can have an idle loan and it just doesn't cause a reduction on this, even bank type of loans, other type of bank loans, because that's separate government related funding. And so we'll see that and look at things and try to just be readjustable, but a lot of the times it shouldn't affect the positioning on other products. Sometimes it may change depending on the borrower circumstances, but that's how it looks like. P.S. If you have a first position only or more, we will take the balance into consideration to see what, if anything, we can give you. But don't be surprised when the rates are higher and the terms are lower, as well as much as, excuse me, the lower amount that you get than your other positions. People come to me and go, I have 5 months. I'm hoping to get 24 months the next time. That just doesn't happen. How do you go from 5 to 24 months? And I look at all the details and I go, somebody had not educated you on this. And that's what you're here for, to learn about this. And so people who go, hey, I got 13-month term, I got 75 or 80,000, I'm looking for a 24-month term. Well, Do you qualify for an SBA loan perhaps at that point, an express loan, a small standard SBA loan, or we look at a personal loan or something else where we can consolidate. We can use funding to pay off other funding, etc. Well, you don't qualify and you're going into a second position. We can't pay off the first position right now, or we can, but it's not in your best interest. So I won't do what's best for me. I'll do what's best for you always. Other people out there are bait and switching you. You want to be very, very careful. Usually the rates increase with multiple positions. Example, you have one position at 30K and remaining balance is not paid over 50% and closer to 100%. Then potentially it can be reduced to 10K to 20K for your second position and so forth. So it's okay. If you're like, I got to do this, it's fine. And you're cash flowing heavily, your revenue is like, okay, it's fine. Not, it's people who don't, and they find themselves in a pinch, they're not depositing frequently, and just a lot of things. Not have a default with another advance/loan company, regardless of how long ago. Usually, if you default, you can never get funding in this industry, period. You can have a default with the past default judgment in place or a current one. And I made an article on that. I may link it to you, and it's also on the site here. And this one you're seeing from an extension of my viral funding solution site, excuse me. This is with Viral Home-Based Pursuits. So I have multiple businesses, and this is where I like to put a lot of my blog content. You can learn more. And so I'll leave more on that. Just be very careful if you defaulted, regardless of how long ago it is, especially if things are not removed and justified, it can be harder to get it. Now we can pardon that and say, hey, we've seen you recently taking out other funding, or you're coming to us, but we've seen you, you got to prove yourself, especially if it's a new lender. You're not going to give you a substantial amount, and you're looking for a line of credit out there, and like you're not in within that realm, especially if you've defaulted. They're not going to want to look at you for lines of credit, especially if you're even if you're an A-tier client a lot of the times, and you got to prove your way in. And so be very careful about what you ask for. Background checks. If your background report comes back with a criminal record or past financial issues and past UCC filings too, then it can be an automatic decline, no MCA defaults. Don't have any issues with these two. I know a lot of people have done this. And be upfront. If I ask you, I know sometimes you feel sensitive and uncomfortable and you don't want to give up but the lenders, the underwriters, myself, will figure it out. Financial fraud, past default and past judgment in place, submitted altered bank statements to another lender, and more. Be very cautious about doing those things. People have even come to me and gone, I thought about altering my bank statements, Mike, I'll be honest with you. But after I learned not to from you and what they actually will do, because I can go into more detail on the repercussions of that, you end up on the data merge, you're already on the lender's watch list. A lot of negatives, and you're just going to start applying, and maybe somebody will take you out there, a very, very low tier client who doesn't have high enough standards. But even those like are hard, and they're not going to want to accept you. And if they accepted you, they don't have the best standards, and you have to be careful what you're getting with those. If you're a startup business, pre-revenue, and looking for startup, lump sum or a combination, there's a post there, the credit line hybrid with 0% interest business credit cards, startup and non-startup friendly, that you can learn more about. And I'll also leave more content down below. The approval amount, 75 to 200%. So I give you some examples there. Click there to get started. There will be a button, and I'll walk you and navigate you through the process. You can learn about it underneath, or it might be above. You'll click the green button above, go to the business capital tab, or if that changes, I'll let you know. And then you start the app sequence and who I'm in partnership with. And it's very legit, safe, and secure. And I'll work on the back end once everything goes through. Everything's in our back office. We can see that, and how I ask for documents to be submitted. A lot of the times, with these fintech companies, they want you to upload the statements online. There are times where I'll ask the client to send them to me first so I can do it a different way and then go to the lender and send it to them there. But times we have portals and stuff where if you send it, we can get it. We can get it in our back office and review it, and then we go to work there. So it's very safe and secure. Other ones you just have to be very careful about and who you give your documents to. There'll be people who email you. I'm sure you know about that, bombarding you. People who actually we've given offers to, and the client tells me, hey, do you know about this other company? I called them and I asked them about you, and I'm not associated with them. So be very careful too about always calling directly, because there's a lot of people who work for the company too, the lenders and the organizations. They won't always give you a clear answer on who the person is, like who. And so that's how it works across the whole board a lot of the times. So it won't always be that way, but it happens to be a majority of the time. And they're always working and doing things. They have a lot of files. They can't bring things up always like that. And so just be very careful about what you're doing. And this is very legitimate, just so you know. Only start your application, and I can work with all states, US, Canada, Puerto Rico. A lot of the times it's harder to do it outside of that because of banking institutions, commingling funds, and the practices. It may open up in the future for other things, but for now, these are how they work. So if you only do this if you want to get the best from me and the communication and the follow-up, don't waste my energy and time, please. Why is your total payback medium to high? People will ask that question. Read that through. It'll break down your objections and false beliefs. A lot of you guys think, well, daily, weekly micropayments. And that's what you see a lot with these daily, weekly. I know a lot of you are probably dropping like flies and think, well, No, monthly doesn't exist normally unless you're doing a personal loan, you're doing business credit cards, personal lines of credit, personal credit cards, installment loans there. Maybe you're going to a credit union, a bank loan specifically. Maybe you're doing an SBA loan, an equipment loan, sometimes lines of credit, but even in this market, you see weekly. It has to be the standard a lot of the time because we can't just give you a huge lump sum and say pay this back 5,000 to 6,000. Can you do it? Oh, I already have other debt obligations. I'll see if I can. So that's not a good answer. And so even if you can make the payments, we have to start somewhere. And maybe we grow into a monthly, but we have to be sure. And we can manage your funds much better if you manage them. You go, my cash flow is better week to week. I know what I'm getting taken out weekly. I can do that. My depositing frequency works daily. I can or I can't do that because I deposit daily. Even if I didn't deposit daily, I still make this amount per month or per week. I can do this every other day or so. This is how much I'm depositing. So you have to think about it. We will never give you something that doesn't make sense. And so micromanaging those payments that come out daily, small, a little bit more, it's fine. As long as you do the sales, you do. Those people who don't take this, it's because they don't understand their sales frequency or they're just very hesitant and they've never done this. And I can understand that. I've been in your position. But once you understand the pattern of your business, it's more predictable money that's coming into your account and you can pay it off faster too if you feel more comfortable doing that or you needed the extension of it, then you go for it. Please keep an open mind. It's not all about the type of payment due dates, rather trying to get a longer term initially if you can. And if you can't, you grow into one and making sure the benefit of these funds exceeds your repayment. That's ultimately it. Benefit, repayment can even be there, but not this. Okay, exceeds it. You want to make sure the benefit exceeds the repayment. And if this is your only option, it is the only one. And if you're going to say, hey, I'm going to make the most of it, I'm going to make the most of it. Usually you see 4 to 24 months, as I said, with the type of payments, it's better in that way so we can manage it. You see that across the board. Always see that and don't expect always to get a monthly unless it's some of the other products or if you grow into them. But it's very, very hard to give somebody that with these private investors, private lenders, and it's not bad. It's just the way it works. And it's better to manage your payments. Okay. So that's not a negative at all, unless you're in a business where it's not as predictable. You're not depositing the way you're depositing. So certain scenarios there, you must be doing a certain amount to be getting a certain amount, repayment so much, even if the rates determined in a lot of cases. So I go into a benefit exceeding the repayment. You're a restaurant wanting to own a new patio to hold more customers, gazebo, whatever you're doing, you're doubling, tripling, quadrupling your profits. You're renovating now at this time of the season. You came back to me already the first time. Yeah, I'm increasing in revenue anyways, and I could take this money. I'll pay it back even faster if I needed to. I'll need it for the extended amount and so forth. So that's the difference. Certain things here to get even a monthly or biweekly repayment, like a personal FICO score above 650, but that's not even enough in this market. Not even 750, like I stated, 800 and above. But even if that is what you have and you have more than 50,000, less than 6 non-sufficient funds in the last 30 days, less than 5 negative banking days in the last 30 days, and some of this here, you may not get as much funding. And two, it won't always approve you, even in the best markets. We have to make sure because of all the market conditions, the economic conditions. And so we can't always give you a monthly. And it's very, very seldom and rare that you get a monthly lender. And there are those, but don't count on that happening. It's fine. I get people who come to me who take out millions and millions, go on weekly and they work their way up into what they need to do. And it's fine because maybe that's the only thing, or they couldn't get an SBA loan or other situations. They don't want to offer up collateral, they don't have it, etc. And so rate calculations, I give you part of the underwriting. So you have no questions asked. I'll also send that to you in the underwriting with more or the questionnaire response when I give it back to you. And then some. Terms and rates continued. A and B paper, 12 to 24 months is what you get. You must have 50,000 in monthly revenue, 675 plus FICO credit score, 1 year time in business. C paper, weekly daily repayment still, 7 to 11 months given. You must have 25K in monthly revenue, 600 plus FICO credit score, 6+ months in business. And even if you just meet the minimum, you want to surpass that. Not only in one, but all three if you can. And revenue is what we look at and even more. So if we look at some things that are derogatory and we're like, well, you're doing that, but it's just, you have too much going on. It's like, we can't even approve you for that. D paper clients, bad credit, daily payments only, 4 to 6 months given a lot of the times. You must have 15,000 in monthly revenue for this, 500 plus FICO credit score, 4+ months in business. And I said earlier with 5K, 3K, those are the other contingencies with other lenders. And again, you'll want to go through me because I can give you what's best and I'll follow up with you as your broker/agent. And so underwriting guidelines continued, applications, voided check, driver's license, tax return only needed, filed last tax return if the funding you're requesting exceeds 100K in some cases, but usually 150,000 and above. You'd have to submit a recent tax return, maybe a current profit and loss and balance sheet, an AR/AP report, AR report, etc. And so it just varies on where you will stand and with that lender. If you are have another position, we just want to verify. But people ask me, can I just submit a tax return? No, we have to see the revenue of the business month to month, and that gives us better understanding and a projection, not just the tax return. If we don't ask for the tax return, it's okay. A lot of the times it's 3 months of bank statements, a copy of your driver's license, and a voided check. California, Utah, and other locations, we might ask for 4 months. You only have a place to probably put 3 months in the app sequence, and then I will ask for the fourth month, whatever that entails. You put the most recent 3 months and the oldest one I can ask for, or I'll say, hey, here's another way to send it in. Here's how we do it, and here's how we'll look at it. So please be flexible and responsive. Driver's license, as I mentioned, if that's needed, financials, it's requested all funding exceeding 100K for A-paper lending clients. It's usually when you're asking for 150 and above. Sometimes when you're with the right A-tier lender, we won't ask for a tax return, or we won't ask for profit and loss or something else. It's like we accept what you have. We won't need to do those checks. It's much more flexible and faster. AR report, accounts receivable. It's not an AR report, then a work in progress report that shows what you have going on in the future. If we're going to give you all this money, that shows us you will still be in business and you can afford to pay back. More on the underwriting, excuse me. You can see there top 4 underwriting issues. And I'm not going to go through this all right now, but you can see that bank statements, what they show. Your background report comes back with criminal record or past financial issues, past UC filings. We can be flexible with that, but however long ago or how recent, what it is filed against. But yeah, even with a criminal background and record, I've worked with people like that. They're very honest people with me, and they've learned their lessons. Sometimes if it's a most recent thing, it's harder to get approved for. But if it's something that happened in the past, maybe you've already learned your lesson, you've taken funding, or this is like, okay, I'm learned my lesson. Here's my businesses. Yeah, we can work with you on that, and we can be more forgiving on those things. Bank statement shows more than 5 or so negative days, not 7 insufficient funds during the last one of the last 3 months, etc. Extra underwriting requirements that I kind of went into more or less before. For B2C to D paper funding, step 1, once you sign your DocuSign or however you completed your application is completed, it will go through our junior underwriter, which runs a final report such as a background. They collect decision logic verification. This is when we ask you to click a link. You'll put your username and password. It's very safe and secure, by the way. This is how the lender verifies. And so they'll look into the account, make sure everything looks good. They'll deposit the money in, ACH withdrawal. That's how it works. People go, I don't know what my money's getting deposited out, withdrawn. Well, you agreed to that. Look at these things through, and it's very legit. There are some other positions, like with other services out there, like personal loans and so forth, where you see a promissory note. And so sometimes there's an upfront contract, and just making sure it's a very legal one, and how it works. And that's just a commitment to and how you're going to be getting your funds, what kind of funds, and I can communicate that with you on other types of services, if not these in some cases, not always. But step 2, senior underwriter reviews the bank verification, checks ownership, conducts funding, calls to approve the deal, and then after they say this is something that we should move forward on, it gets moved into the final finance committee. Not always will they give you a call. Sometimes they will, just to verify things, but that's how it goes. Step 3, finance committee, upper management approves wires to be sent. Step 4, wire ACH. The majority of lenders send ACH, but the A-paper lenders usually send wire transfer. That's pretty cool. Funding for A-paper, your offer is presented and accepted. Once you accept your offer, either in online checkout, you're not A-paper, by the way, if you're bad credit. If you're good credit, you're like 675 and above, 700 more so, then that's considered A-paper. With 50,000 and above, with more so 2+ years time in business, you get better rates between 1.19 to 1.3 as opposed to 1.31 to 1.49. And that's fine. Even if you get that, you have to start somewhere. No funding call. So online checkout occurs, or you will receive a document, our DocuSign agreement. No funding call can take place. There is no funding call interview because this is an A-paper client. They trust you a lot of the times. You sign the funding agreement either through DocuSign or online checkout link. No bank verification. Bank verification is also waived in 99% of the cases, but sometimes that'll be there, so just expect that. If you're interested in getting a personalized, customized email response on your best funding option and options, that's the questionnaire that I was alluding to earlier there. And this could look a little bit different in time. Let me see if I update that. And I'm A/B split testing, so you're seeing a different form right now. Sometimes it's like yellow lettering and a few things. But early payoff discounts explained. Paid off the first month, you get a 12% discount on your unpaid balance, includes principal and cost of funds. Paid off the second month, 10%. And there's some better discounts as well that you can get. So this isn't all limited. And usually I, myself, with my team, will get you the best discounts in early payoffs. And this is why a lot of people turn to us, not only for that, but for the maximum funding, the relationship you have with myself and my team. You have it in the door. I can't say it enough and stress it out enough. I've done this for so long. I know other institutions, other ones will bait and switch you. They don't give you what's best. The communication and the transparency is ultimately what you want. Nobody's going to pressure you. We don't pressure you. I'm going to explain the benefits of it to you just so you make sure, hey, I'm taking this money. Make sure you understand that with this money, you said you were using it for marketing and you're going to put $1 and get $3 out. And if you use it for 4 to 6 months, on top of that, you're going to be regurgitating that money to get equipment. And that can happen in less than 3 months. And you're going to increase your revenue now from 40,000 to about 80,000. You're going to double it, if not triple it now. And so just think about those things. So A paper lenders will always provide prepayment discounts of a range between 20 to 25%. There's even more in some cases, unlike for the B and C paper lenders having an 8 to 12% prepayment discount, 8% to 12%, excuse me, of the total amount due, including your principal and cost of funds. The A paper lender will take the 20% to the 25% cost of funds only and not the principal borrowed. So here's an example, and I'm going to quickly go through this because Canada funding, you can see there's qualifications. It's a bit different. I'm not going to go through all that right now. Can you stop making payments? Be cautious of that. And no, you don't want to stop making payments. Of course not. You don't want to just close off a business checking account, leave the banking institution, or shut off everything. That doesn't do you any good. You change entities now because you defaulted. It's still underneath you, your name, and who you are. Just know that we can track these things. The lenders are very savvy as well as the underwriters, myself included. And so don't do that. Understand what you're getting yourself involved with. Personal guarantees, of course, like especially if it's your first time around. And there are some business credit cards and things like that where there's no PG involved, but you still have to put your foot in the door. You have to have that relationship. And even if you have that relationship, a lot of these have to have that. That's just how it works. Credit bureau reporting, as I said earlier, doesn't report to like the business credit bureaus, like Dun and Bradstreet, Equifax, TransUnion. So you don't have to worry if you have bad credit. And even with good and above credit, I'll change that word, good land. This is very helpful because you have something on your file you don't want showing. You're not concerned too much with it being on building your business credit on that regard. There's other ways, like I said, and I'll leave resources to personal business credit stuff down below. How to get started, pre-qualification. You complete the qualification, submit documents. Very simple, straightforward. Again, another note, please be energy and time efficient with me. I don't want to waste my time, my team's time, especially. I've had them come back to me, go, hey, Michael, where's this person? I don't need to hear that. We should do this where there's none of that. So monthly versus daily, weekly, bi-weekly loans advances the reality. I explained that more or less what I said earlier in the quick breakdown of that, what it entails. Documents need for up to 2 million, void to check, bank statements. On occasion, what we would need if it's more agricultural or seasonal. Tax return optional, financials optional, etc. Application process, again, business lines of credit up to 100, if not more, up to 250,000 in those cases. And I'll show you some alternatives, but we can try to do a line of credit with the lump sum. You won't always get a line of credit. You'll just get a lump sum. And even if you got a line of credit approval, it doesn't make sense. The lump sum makes more sense to go with because there's a contingency. We won't get you as much on the line of credit than we can on the lump sum. Usually it's between 40 to 50, 40 to 80% in this market. You get approved for a line of credit, whereas opposed to 75 to 200% on a lump sum, like that could do you more good. But if you're in a position where it's already bad credit, you're surviving, like you're not going to get it, not even on a personal line of credit. And so what you have to understand is, even though with a line of credit, you can withdraw the money and use it as you choose. It's not a lump sum. You can use it. You only pay interest on what you use, put it back in the original amount. You have that remaining. Good. You start all over again. You only use as much as you can. You withdraw, boom, do it again. It's like through a business credit card, a revolving line. So 550 plus FICO, 15,000 plus per month in revenue, 1 year plus time in business, anywhere in the United States, US only. And even at the minimum, that doesn't work. So you really want to just be doing above 600, 625, 650, a minimum of 15,000. It's also industry specific, like truckers and a few other ones out there. We're not going to get you a line of credit. You have to be doing like 50,000 and more. You have to have a fleet of trucks. If you're associated with the group instead of independently on your own. I mean, there's other things with other industries as well. Example, I kind of go through that. There's more of that I explained. Do you even qualify for an SBA loan? And so I'll have a section of that here. And I'll leave more information on video content on SBA loans, but it's not the end all be all. It's the cream of the top. And my goal for you is to ultimately get you into an SBA loan. Like I have a pattern of, hey, we got to work on the very bottom, personal and business, and then thereafter is unsecured funding without collateral. It could be through a revenue-based financing now, like we're kind of more or less going through. There's a collateral stage. There's also a collateral stage or non-collateralized with the SBA loan, and that's the cream of the top. And there's a ladder that I've built together that I can help you sequence from one to the next. And we could try to do multiple things at once in some cases. And so with an SBA loan, you can get bridge funding, like a lump sum or a line of credit, and or on top of, in the meantime, while you're getting approved for an SBA loan, if you do get approved, and then consolidate that or keep them separate. And so here, I just go over business credit established with at least 155 in business liquid credit. We look at a 115 minimum in some circumstances, even with lower credit, but it's harder to get approved. Those are the exception. with their projection on revenue and profitability, but it's harder to 155, 145, sometimes 115, but 155 is what we look at on these generally. And strong cash flow, equity, if you have it, liquidity can be looked at, equitable collateral, sometimes a down payment. Liquidity is enough. So we look at the bank statements and a few things. And these are things that I look at myself. Sufficient collateral if needed, not necessary to supply, but they just want to know what you have. And they can lend you more even on that. 10% down payment if needed, 680 FICO, 660 sometimes, 650 entry point. I would say 500,000 in annual gross revenue, 400,000 or 120,000 or 150,000 in some cases. If you're looking for less to get approved for and you meet it, but just the minimum isn't always enough. Have stronger credit. The last two are more for express loans / small SBA 7A loans up to 50, 135K, if not more. And sometimes it's up to 25K in the market. We're shifting and we're seeing how much we can actually get you. 2 years plus time in business is best. At least 2 years of profitability. Most recent is best. Great credit and great credit reports. No bankruptcies, foreclosures, liens in the last 3 years and more is included. And I could break down more of it. Up to 2 million alternative. I would say really there isn't one out there that's better than what I have here. And I've, again, scoured everything and I know what is available. You want to go through this post and click the link that's there or the links and get started that way. I'll also leave them for you down below and it should populate my information and you'll be able to see that and I'll navigate you, like I said, in this. And that's the direction you want to go into for more flexibility, longer term partnership and relationships. Equipment financing options, these kind of more so APR business loan types of monthly repayments, equipment financing, leasing to own. Quickly, I'm just going to go through, I'm not going to go through every detail. Funding amount up to 200,000. There's some lenders out there that will do more. So I'll work with you on that and show you what that can look like, especially if you fill out the questionnaire. 24 to 72 month terms. Certain industries are much harder to get approvals for because of the market. Have online banking set up. Do at least 10,000 in monthly sales. Have a down payment of 0%, 30% depending on the credit. Owner 590 plus FICO credit score. FICO 650 plus required for startups. And that's a minimum. Like there's A-tier lenders out there who are requiring 700 and above and a few other things. You cannot have any active MCA funding. Sometimes there's an exception to that. And there's other lenders who will kind of consider that, but not always. Current loan consideration. If you have one, the amount you still owe will be taken into consideration and effective approval. Invoice required, purchase order for quote. No long haul trucking for specific lenders. A majority of them actually right now in this market that could change in the future, but we'll look at it. Asset backed funding option. That is there as well. This is one you can mitigate if you have bad credit, if you have maybe your revenue doesn't look good month to month, and you have what you need. So certain requirements for certain options. So asset-backed commercial real estate and or developable land. There's the description there. I won't go into it all. I can also break it down on the questionnaire. If you have this and you're eligible for this, you want to be doing at least 75,000 in monthly revenue. So people will go backwards. It's harder to get approved for if you're like dipping in sales. You might have another way. Account receivables, unpaid invoices. If you have that over 30, 60, 90 days of about 500,000 in this market now, if you have that over 30, 60, 90 days total 500,000, not every single month does that be 500K, but a total, then we can look at it. Even less of a 250 with some exceptions, but 500,000 is what we want to look at for the majority of a lot of industries. And you can control how much you give up. You want to get 400,000, make 800,000 in account receivables, unpaid invoices. Yeah, you save a 400,000 amount, put that back in. You have extra cash flow, help you bridge funding, etc. Now you have more. Example, kind of go through that there. There's also inventory, AR lines of credit. We can sometimes do, or we can do equipment, offering up trucks and stuff like that, like titles. You own the vehicle. It's much harder because of the market and resellability and appreciation, depreciation, especially if it's older equipment. It's harder to. Newer equipment, we can be more understanding, especially if it's an SBA loan. We can look at that even more in depth. But with other private lenders, they don't want that. They want more heavier machinery type of equipment, things that's more easier for them to be able to resell and what they can do. And they look at a lot of the times when you're getting equipment and stuff like that, liquidation value and at auctions and stuff like that. And that's why you get less in a lot of cases. So there's that. What I like most about these organizations and some extra bonus material down there, extra bonus tips that you can gather from me. So you'll want to view this post until the very end. If not from the questionnaire, I'll guide you on all of that. So, man, a very long post. Thank you for sticking with me. Even if you had to bookmark this, I've been in this position. I work 9 to 5, and I know how hard it is to start your own business. Whether you just got started or you're looking to get started or you're in this business long enough in your own, and you go, I remember back then, and I was there 9 to 5, underappreciated, undervalued, underpaid immensely. And I wasn't getting paid what I was worth. Really, the person in front of me did not want to retire, an ex-engineer, hardware engineer, for Intel and a few other things. and I was wanting to take over that position. I thought I would, so I stayed in there for more stability reasons. Post-academic, I went to school for the university system and the community. I went to school originally for chemical engineering. I went to sociology, chemical engineering, and then not that it was hard or anything, it just wasn't enticing for me. My favorite class was chemistry, and then I realized I wanted to get into the business side of the equation, the business financing, business administration, and stuff like that. And so I had also worked before that, and I had or just a little bit of thereafter as well. And I was going to school, and I was also a Division I soccer athlete. So those things happened. And I also worked, and I worked in various roles. I worked in the retail for a little bit, worked in construction, manufacturing, warehousing. I did the ramp agent stuff in my younger 20s. And so, getting all these experiences did a lot for me. And I wasn't like saying I was given like a financial role underneath those businesses. I was having to do the grunt work. I was at some cases having to move the material for construction companies and then doing the piping stuff in the manifold, sewer line, whatever it was we had to do. And then manufacturing, Headerman, getting the machines for an aerospace company, and then was moved over to a blueprint room looking at more of the dimensions and mathematical stuff. And that's my mind. I'm mathematical and systematically oriented. And so then getting into other roles like financial logistics roles and having to look at data, I still had to move some things. And at the time, having been forklift certified, because it was very slow, I got into that. I said, hey, it's very slow. I'm not doing it all anyways with this stuff, but we're doing a lot more on the computer, budgets, inventory, ordering and purchasing stuff, looking at the numbers. But then it started to ramp up a little bit. But I started to it was hard for me to do physicals. I'm not like wanting to do physical stuff. It's not me, but I pushed through it. And we were lifting boxes and stuff, computer stuff. And so I was working hard up here as well as putting my body in position, but it slowed down. And then I was able to just focus on the computer stuff, which was great. And sometimes you got to start somewhere and get your foot in the door in a company to grow up levels. But it just happened where the company ended up going down under. And then I had to end up finding ways, even before that, I got in contact with a friend, told me about a specific way of making a passive income. And I started learning about digital marketing agency, affiliate marketing, got into that whole role, built those businesses over time, and then transitioned into ultimately what I wanted to do as a business loan broker. And so that's a quick rundown, a summary. There's more in these little parts of the story, but I know where you're coming from. I know how hard it can be out there. So hopefully this sheds some light on you and you get to understand what to do. You go here, you can go to how it works. From there, you can even click the apply now. It's really not an apply now, it's a questionnaire. I might change this. Real estate questionnaire and a few other things. And I'll guide you through how it even makes sense to do this over the phone, because I don't want to be wasting my energy and time, let alone yours. And it might be sufficiently used, but what if it never goes anywhere? It's just too many variables. I just can't take a chance on it. And when it makes sense too, but not in all cases. So this will be down below. Fill out the questionnaire. We went through this. The post, you'll see it as well. And if there's anything more I update you with, I'll have that. But this is a lot of it most recent and what you're going to be seeing moving towards the future. There are a lot of options on the table. What you want to do versus what you don't want to do. Be very careful about who you turn to in this space. Go through somebody who's going to take care of you. I don't do this for the money. I really do it because of impact and value. And I know there's a business side, but I take this and I put it back into the business so I can help more people like you. And you can share this with others, even with people you don't even know. And I can donate what I have to portion of that. And I like doing things like that and being able to give back to the community and people that have been able to help me out, coaches, consultants, yourself included. And I really am respectful and all that. I don't take anything for granted. All right. Please give it a thumbs up if you found value. Share it with others so you feel will find value. If you haven't subscribed, please do that. And click the bell notification icon so you do not miss any future content I will be coming out with. And very lastly, bad, good credit with, without collateral, hard, no hard credit checks. These are soft pulls a lot of the times. Quick pro tip, if you're below 650, sometimes there is a hard pull involved, and we will ask for that consent, that upfront. A lot of the times, though, it's just a soft pull. With these others, there might be a hard pull. We just all guide you through the process on those. A lot of the times, those soft pulls. Some certain products like personal loans, etc. Some other business loans out there, like SBA loans, you'll see hard pulls at a certain stage. There are like the Navy Federals, but that might not even get you enough, or you might not be able to get in the door. When you get in the door, you're like, okay, this is just probably a bare minimum or just enough. I need to look for more. You can add on an addition. There's benefits to that. And yeah, those might be hard pull when you just start the application without a pre-approval soft. So be very careful about what you get involved with. And again, I'll help you out. That's everything for now. Appreciate you. And I will talk to you on the next one. Look down below in the description to get started. Talk soon.